Hello traders and welcome to this first live session with Quality FX Trading. As I promised you, we already passed 100 subscribers milestone and now we are more motivated to show you more content, and as I promised, live sessions are coming up. This is our first live session, and in this session I'm going to review the pound dollar price action for the last week, which was first week of October 2022. And hopefully our regular live sessions will start from 2023, from the next year. But of course, for this year also, we are going to have live session time to time. And I also invite you to go to our channel and watch our different videos and the content, the educational content, as I'm uploading every week, so you can learn about this smart money concept and the way we are trading. And our goal is to show you how to read the price action correctly so you can start learning trading in a different way, which can lead to profitability. So let me start this session by going to the pound dollar pair. This is the weekly chart, and you can see overall the price action is showing us the pound dollar institutional order flow in the weekly chart is bearish. So last week, here in this horizontal orange line indicating this bearish order block, and last week price went to the upside to retest this weekly bearish order block, and after that you can see price how it got rejected to the downside. Now let me just switch to the daily chart, and you can see how the price action started to go up last week. And you can see this was the price action of last week, and the 5 candles which is showing us the Monday to Friday trading for pound dollar. So these two bullish candles, it was in Monday and Tuesday, and price touched this weekly bearish order block, which was this orange line, and then Wednesday price got rejected to the downside and it came to this fair value gap on a daily chart. So the rest of the week, which was Thursday and Friday, price pushed to the downside. As I have mentioned, the weekly chart, our bias on the weekly chart is bearish, and that's why after retesting this bearish order block, price came to the downside. And Friday was the non-farm payroll, and you can see this was the candle for the non-farm payroll. So now what I'm going to do, I'll go to the 1 hour chart and I will show you how we can outline the daily setup based on our higher time frame bias. So you can see here, this is the H1 chart, and I'm going to show you the price action after Wednesday. So basically Monday and Tuesday, price pushed to the upside and retested this weekly order block. And you can see this was 5th of October, which was Monday. So let me just put a vertical line here to separate the daily price action. This is the 5th, this is the 6th, and then finally up to 7th of October. So you can see the price on Wednesday pushed to this upside as the last days, which was Tuesday's high, and it took this buy side liquidity. So basically there are some stop losses placed here for those people who are selling, and also some buy orders for those people who are buying. So that's why big banks and those smart money accumulation is happening first, and then price is moving to the upside to take this buy side liquidity as indicated by this pink line. So once the buy side liquidity is taken, then you can see price is moving to the downside because our bias was bearish and we wanted the price to touch this weekly order block, and then it has to come to the downside based on the institutional order flow which was defined. So this price is going above this pink line to take those buy side liquidity, and then it's a perfect scenario, and this is a perfect entry to break the low of the previous day, which was here at 1.12800. So once the yesterday's low broken, this is showing a confirmation from that bearish weekly order block. So the next day, which was Thursday, 6th of October, you can see actually here for the rest of 5th of October, price was consolidating after this distribution, and here when the Wednesday price action is starting, we are going above the day before high, and again it's taking the stop losses and this buy side liquidity which was created on Wednesday. So basically price action is creating liquidity for some time in the future to be taken, and here you can see this pink line is creating a liquidity and the price is going above to take this buy side liquidity, and as our daily bias was to the downside, so once this manipulation finished, then you can see the price is distributing to the downside, and again it's breaking Wednesday's low here. So actually I'm explaining you how market was reacting to this orange line which was the weekly bearish order block. So it is always important to wait for such kind of point of interest before taking any trade. Because always these levels are not holding the price. So we can see Tuesday is holding and price is rejecting to the downside, and this was the scenario, and that's why we were bearish. So once price came to the downside, then on Wednesday scenario was repeating, and that's why I'm emphasizing it is so crucial to read the price action correctly, because when you know the bias is bearish, then you don't care about this upside move, because there is a logic behind this upside move, and the logic is to take a stop losses above this high in form of buy side liquidity. So here it's taking the stop losses above this high, and then price is pushing to the upside to break yesterday's low. And then again price is consolidating here on Thursday until we go to the Friday, which was non-farm payroll. So in non-farm payroll, exactly same thing happened. You can see the price in the Asian session was making this liquidity. Price pushed to the downside, and then it comes up. It took the buy side liquidity here, and once the buy side liquidity was taken in this high, price has distributed to the downside, and again it broke the Thursday's low. So you can see, when you understand the logic of the price action, and when you can read the price action correctly, how trading is becoming easy for you, and you can easily catch the right setup on the right time. So what I'm going to do here, I want to focus on Friday's non-farm payroll, and to show you how you could trade from this high, which was around 1.12200, which is actually institutional level. As you know, we have institutional price levels in the round numbers like 112, 112 200, 112 500, and 800 levels. So these are institutional levels, which usually big banks and big funds are targeting for the entry, or even for the take profit. So if I move to the 15-minute chart, or actually to 5-minute chart, so because I'm usually using the 5-minute chart for the trade entry. So here, this is the Friday, October 7, and the chart time frame is the 5-minute chart. This was the accumulation phase, which was in the Asian session. You can see how price is fluctuating to the upside and downside, and this price action from here to the downside was actually the manipulation before London session. So price pushed to the downside, and then during the London session you can see how price is going above this high, and here it's creating this high here before the price pushing to the downside at the time of NFP, and this distribution was after the release of non-farm payroll. So in the London session, you can see price basically manipulated to the upside above the highs, and maybe there is a question here, why price pushed to this level only? Of course, this was Asian session high, and the buy side liquidity was resting there. This is one reason. But let me tell you the second reason, because beside the buy side liquidity, if I zoom in here, I just switch back to the 1 hour chart to show you why price is coming to this level. If you see here, many times we were discussing about fair value gaps concept, which is very important and is kind of point of interest for us. So here at this level, you can see there is a fair value gap in the 1 hour chart. If you can see, I'm just putting that candle's low, and let me put another line in this candle's high. So between this candle's low and this candle's high, there is an area called fair value gap. Means the price didn't push up to that area yet. So, and you can see during the manipulation on Friday here, during the manipulation on Friday, price is pushing inside this fair value gap in addition to taking buy side liquidity, and after that price is pushing to the downside once the non-farm payroll news released, and the distribution to the downside, and at the same time you can see how price is taking this Thursday's low. So this was actually, if I just switch back to the 5-minute chart, so here in this 5-minute chart, you can see price was going inside this fair value gap. See, so this was the point of interest for us after this manipulation. But always remember and consider that when you know your bias in advance, that will help you to read when price is going to make the manipulation. So when price was here, I knew that this is the daily London session, and price is going to above this Asian session high inside this 1 hour fair value gap, and from this 1 hour fair value gap after non-farm payroll news, price pushed to the downside and broke this low. So you could actually basically here, if I zoom in and to show you what kind of trade setup you could take here, you can see price is going here and then here pushing to the downside, taking this low, last low, and then price is coming back up to this fair value gap here, which I can just put it in a different color to show you better. So let me draw another horizontal line. and you can see this was the fair value gap in that 5-minute chart. And when price is coming to that, uh, even you can switch to the 1-minute chart and see how price is perfectly reacting to this level, and exactly before the release of non-farm payroll job data from the US, you can see how price is pushing to the downside. So you could easily put your entry level here at 1.12050 and keep the stop loss above this high, which is around 112,250. So around 20 pips stop loss could protect you from taking this perfect sell setup to the downside, and see how much was the take profit, which was here below this low at 1.11200. So this trade was around 90 pips profit if you were taking the profit in this low actually. So this low was your take profit, and if I want to just put the just to make it more clear, so just to make it more clear, I want to put the text inside this to show you that this could be your trade entry. So your trade entry was inside this, actually it was exactly after retesting this fair value gap in the 5-minute chart, and the stop loss to protect this trade was above this high, so around 20 pips stop loss, and then your take profit was here at this pink line once the London session low is broken. So this was your take profit level, so which was around 90 pips trade, which is actually going to be perfect for trading non-farm payroll. So this was the perfect setup you could take actually during the non-farm payroll and the job data. So this was a trade entry. As I said, there is a fair value gap in 5-minute chart based on what I have explained to you from the beginning of this session. For those who didn't watch us from the beginning, please don't forget to watch the recording so you will understand exactly why this kind of setup was created during the non-farm payroll. So the trade entry and then a stop loss above 20 pips. So by 20 pips risk, you could take the trade to the downside during the non-farm payroll, and your reward was around 90 pips, and this was the minimum reward. You could keep the take profit exactly in this low, which was the low of London session. But of course, this level, which was the low of London session, is the same level of the Thursday's low. So the take profit was here. Of course, for those who wanted to cheat their trades on, they could even get up to 150 pips profit, which was really great for the non-farm payroll. I'm personally not advising you to trade on the non-farm payroll day, and usually try to avoid trading during this kind of events because price is showing some uh, fluctuation, which is not going to be healthy price action. But sometimes you see this kind of price action, which can be even healthy to trade, is happening. So, but overall, I don't recommend you to trade during the non-farm payroll or interest rate decision or CPI news. So this kind of big events are not recommended to trade uh, at these events. So you can easily trade in the normal days based on these logics which I'm explaining to you, and you can read the price action correctly, and this is going to be useful for your trading psychology as well. So by saying this, I'm going to end this live session for today. Hope you have enjoyed this live session and you got some benefit. You got some benefit out of that. So until next time, have a good trading week. And of course, if you like this kind of live sessions and if you want to see more educational content from our side, so please don't forget to give us thumbs up and give us your feedback basically. And don't forget to leave the comment and write to us what you want to see, which is not covered by us yet, and what is basically your interest, and even those uh, things that you like in our videos, you can raise it in your comments so we can um, cover it more. And also, if you have any question, please don't forget to ask, and be uh, don't be shy to ask, because I'm going to reply to all your comments, and also I will be responding them during the sessions, either recorded session or live session which you will have. So please feel free to ask any question in the comments, as our goal is to create a community of all successful traders. Don't forget about this. This is our goal, to make all successful traders, and hopefully we can grow this community by time together, and we can learn from each other, and by watching and listening to our videos, hopefully you can get benefit and trade better than before. Thank you for watching us, and